talk to me about the company. We are joined by Yogesh Kumar Jain. He's Promoter Director at PNC Infratech. He's joining us in our Mumbai studios. Mr. Jain, thank you so much for joining us on NDTV Profit. Now, your company is in the infrastructure space, in the business of, making bridges, roads, airport infrastructure, etc. Now, why are you tapping the primary markets to raise funds? Are you looking to retire debt? What is the plan here?
So this 150 crore rupees for the working capital and 85 crore rupees for the equipment purchase and 65 crore rupees equity investment in the one of the our BOT project, Raebareli Jaunpur. Around 100 crore rupees for the general corporate purpose, 35 crore rupees for that repayment, and 55 crore rupees for the offer for sale.
All right. So we've understood the fundraising and its requirements. Wanted to understand what is the kind of order book that you already have. There are already listed infrastructure players in the capital markets. What's your order book at this point of time? We've seen that your top line growth has been decent, about 16%. Over the last 4 years between FY10 and FY14, but the profitability growth is anemic. It's just about 4%.
Well, so if you will see our 9-month result, so you will find our top line increase around 47% and PAT growth is 68% around. So further I will tell you about the PNC. PNC is the core construction company, core EPC company. We have completed around 42 projects across the 13 states of the India. Out of which 24 projects are from the road sector and 17 from the runway project. One is industrial project. We have very good or robust order book. We are executing 7,850 crore project, out of which 4,300 crore we have already executed. So balance work in hand is around 3,500 crore rupees on the 1st April 2015. So we have very big, above 3,500 employee base, out of which 49 MBA, 279 engineer, 12 chartered accountant and one company secretary. Company has the capacity to from mining to road marking and in-house bidding capacity for calculating estimation for designing and traffic estimation.
Right, Mr. Jain, we want to understand, you have a lot of the projects that you completed, but are you largely an EPC player, and what are the margins that you work with on an average, so that the investors get a sense of if they invest into your business, this is what they get out of it?
Well, we are generally bidding for 13 to 15% EBITDA margin.
Right, but are you also into the BOT projects, or majority of your projects in the EPC division? Because now EPC seems more viable than the other ones.
Yeah, we are basically EPC guys, and we are core EPC contractor, but we have a good portfolio of BOT projects. We have total 8 BOT projects, out of which one is OMT. So BOT, NOT and OMT, we have total 8 projects. The total equity requirement was 490 crore in these projects, out of which we have already invested 425 crore rupees. So only 65 crore rupees equity investment is balanced. So we are taking this from IPO proceed. This is for the Raebareli Jaunpur project.
Right. But in this business, there's a lot of competition. Do you think that competitive intensity is going to pressure your margins? What are the annuity income, the tolling income that you have?
So no, we have basically EPC business. So in EPC we are working on we are closing this 9-month EBITDA margin 14.1% with the around 6.1% of PAT margin.
All right. What about your toll income? What kind of annuity income do you have?
So total we have 8 BOT and OMT project, out of which 5 are operational and 3 are being to be operational within 1 month, and one is within 1 month and balance 2 in this financial year. So BOT income is around this 9-month toll collection is around more than 200 crore rupees.
All right. What is your debt situation like? You said you will use some of the IPO proceeds for working capital debt. What about the long-term debt?
So we have only in standalone balance sheet only 35 crore rupees long-term debt. So we will pay out this after IPO, this 35 crore rupees. And we have only 300 crore rupees working capital debt. So we will reduce this debt by 150 crore rupees to the extent of 150 crore rupees.
Now, is this 35 crore rupee or consolidated debt?
No, it is on standalone. We have in consolidate in SPVs due to BOT project. This is around 1100 crore rupees. But this debt will be paid out from the toll business in SPV separately.
All right. And what is the debt to equity ratio?
Debt equity ratio is 1.8 times.
Right. What are the growth projections that you're working with? You know, last couple of years have been tough, but in the 9 months till up to December, your performance has looked up. So if I put in the money in the IPO, what kind of top line growth and profitability growth, sustainable growth can I look forward to between 1 to 5 years?
Our past growth is around 47% in top line. So you can judge about growth for the future.
All right. Thank you so much, Mr. Jain, for speaking with us at NDTV Profit and giving us more details of your company and the IPO that is open.